Let's also go across to my colleague Pranay. Pranay, banking sector has been in focus, especially the PSU banks, the sort of results that they are giving. What has been the sum up as far as banking names are concerned so far, and what to watch out for?
Pankaj, as you rightly said, because of the RBI's revised framework on stressed assets, they've had to provide significantly higher provisions this time, which is weighed on their bottom line, and therefore the gross NPA numbers look rather exaggerated on a QoQ basis, let alone YoY. So for Dena Bank, actually RBI has barred it from further lending because it is now under prompt corrective action. It has seen no improvement in its asset quality. In fact, there has been negative return on its assets in the last 1 year, and though its capital may remain adequate because of the infusion that it may have received from the government, as have others, a large part of that is being used to provide for the rising pool of NPAs, and therefore that is not what investors like, which is why you are seeing all these stocks being hammered out of shape. Similar is the case with Bank of Maharashtra, OBC, Allahabad Bank and UCO Bank, which are also under prompt corrective action. And later this week you will see a meet where they will be deciding the future course of action, as 11 banks are under RBI's PCA framework right now. You were talking about results. Even though we are seeing growth for some, like Canara Bank posted about 10% growth in the NII, the provisions have actually ballooned 4 times on a quarter-on-quarter basis. So therefore, it posted a huge net loss of 4,800 crore plus. Was the profit same quarter last year. Therefore, I don't even have to read the gross and the net NPA numbers. Even if you look at Allahabad Bank, the NII is down about 35%. So not only has it seen degrowth, but also its losses have jumped to now 3,500 crore was the profit that it was reporting in the same quarter last year. And if you look at UCO Bank, though it has seen good lending growth, NII is up about 33%, the loss is as high as 2,000 crore rupees. So that too has quadrupled from same quarter last year. And the fate is no different for even banks like OBC, where again it has a net loss of 1,600 crore, and therefore it has seen no improvement in asset quality, as I was saying.
Right, Pranay, thanks so much for that. After Dena Bank, the Reserve Bank is now likely to impose restrictions or certain restrictions on a couple of more PSU lenders. According to reports, bank under the prompt corrective action mechanism would be in focus due to the worsening asset quality. There are about 11 banks, out of which 21 state-owned banks are under PCA of Reserve Bank for their weak financials. 1 or 2 more banks may likely face the PCA prompt corrective action, like Dena Bank, if the quarterly numbers indicate further erosion in capital and unabated rise in the net NPA. Meanwhile, Finance Ministry has called a meeting of 11 stressed banks which are under the PCA framework of RBI on May 17 to discuss and deliberate the implications of agenda. Let's go across to my colleague Ruchi for more.
Well, yes, absolutely, Pankaj. As you've rightly pointed out, Finance Ministry this week will be holding a very important meeting, and this is for the 11 banks that are under the prompt corrective action by the RBI. This includes the likes of OBC, Bank of India, Bank of Maharashtra, Dena Bank, and many more other banks. Now, remember, over the weekend, we have seen how more curbs have been put on Dena Bank, especially with respect to hiring and further lending. And this, in a way, shows that the government wants these banks to clean up their books to ensure that ensure that recovery of the NPAs also takes place. Apart from that, we are given to understand that all the other banks will, the government will also be reviewing all the other banks, all the other 21 banks as well. They will be discussing the 20-point reform agenda as to how the banks have performed as per those 20-point reform agenda, which includes how the banks have performed with respect to the selling of their non-core assets and many more other parameters, what they've done to ensure better recovery, to ensure better NPA management. So, well, yes, this is going to be an important meeting. And, of course, after Dena Bank, that's on the RBI's PCA list, and they've put in some stringent curbs, especially with respect to lending and hiring. We understand that there could be a couple of more banks as well that have not performed well in the last, couple of quarters. Even they could be on the radar now.
Okay, Ruchi, thanks a lot for that. But we'll discuss this and a lot more on banking with Lalitabh Srivastav, the AVP Research with for BFSI segment with Sher Khan. Lalitabh, hi, good afternoon. Thanks for joining in. It's a well-known fact, that banks, the major problem for banks has been stressed assets and, worsening asset quality. Of course, the government as well has been kicking in, trying to do all the necessary efforts that are needed to essentially resolve the asset stress, but it does not seem to be abating. Day after day, we have banks being pronounced as PCAs, or rather under PCAs. At this point of time, Lalita, how do you look at the entire stressed assets, sector? How are you looking at asset resolution? Is it happening at a pace that you expected it to happen at?
Yeah, hi. Thanks for having me. So clearly, the pace of stressed asset resolution leaves a lot to be desired. But at the same time, this is a new process. This is a process which is still evolving as the day progresses, and so it will take some time. When the process is more refined. But at the same time, my sense is that more or less the incremental steps are in the right direction for the banking industry.
Right, Lalita, are you surprised by companies like Dena Bank or any of these other smaller banks which have reported very weak numbers, because they have constantly been writing off loans, bad loans, and that's why after this directive, again the numbers have ballooned up again. What does this tell you?
See, some of these PSU banks, they were already exhibiting signs of stress. We have since long maintained a very cautious stance on most of the PSU banks, and rightly so, because it is now reflecting in the results and the numbers. But at the same time, one gets the sense that the phase of discovery or recognition of bad loans is nearing nearing its peak. So as to say, at the same time, earnings will be constrained due to factors like interest reversals that will happen. NIMs will be compressed for a couple of quarters more. You can expect, as you said, a high amount of ARC sales. But at the same time, look at some of the positives that a lot of upfronting of NPA provisioning is being done. A lot of banks are indulging in a recognition phase, which is going to lead to a better and more cleaner books. So I think it is a phase, a painful phase, but a necessary phase for us.
Right, Lalita, just the point that you were making right now that, the worst is behind, acceleration of this is looking to reduce. Time and again, we, markets, investors, stakeholders, banks have been trying to predict this happening. So do you think a private sector bank which is well capitalized with good market share is still a better place than PSU banks?
Yeah, so I'll correct. I'll put it across like this: that I'm not saying that the worst is behind. Definitely, we are in the phase which is near completion. But at the same time, drawing a comparison with private sector banks, I think we are positive on retail-facing banks, mainly because a more granular book seems to be a better point of place to be at this point of time. Retail growth has been quite strong. There is not much of a problem in terms of names and asset quality in that front, and prima facie, even though some of the banking stocks might be attractive, I believe it is better to go for strong businesses.
Fair enough. Lalita, we leave it at that. Thanks so much for joining us on ET Now. And